Welcome to Markets Now. I'm Michelle Rook with Ted Seifried of Zaner Hedge. Mostly higher closes in grain and livestock futures on Wednesday, with the exception of some of the wheat complex. But Ted, let's talk first of all about the corn market. We've been building on a reversal from Monday. Some of this is short covering, but are we also trying to put in weather premium?
Yeah, Michelle, you look at weather this week compared to last week, and it is a little bit spicier. We've got these hotter temperatures returning, and the idea is that it's happening right during pollination. So there's some concern that it might affect corn pollination. There's been a lot of talk about what the overnight temps might be over the course of the next 2 weeks. So that weather premium is coming back in a little bit. I'm also going to say there's some precip in that forecast, though, too. So it might not be the worst thing. However, some of that precip might come in the form of some severe weather, and corn is to the point where it is tall enough that there could be some damage done if there is sustained straight line winds and things like that. So there's some concern about that. But also, we had a technical near key reversal on Monday, and with funds being as short as they are, that's giving maybe a little bit of a reason to cover some shorts.
We're also hearing of some pollination issues. And I got to ask you, do you think that this corn market is now traded the biggest yield? Is it priced in?
Yeah, I mean that was really what I was wondering at the end of last week. Some of the massive numbers that we had been hearing from private analysts. First of all, way too early for that because of this exact situation, right? But second of all, I mean, look, we always have this tendency to overshoot the mark to the upside and to the downside, and we usually do it right about this time of the year. So I really wouldn't be surprised, Michelle, if in fact maybe those the biggest numbers for yield are possibly behind us at this point. I'm also going to say that at this day and age, I think it's harder to beat the top end of yield, of the top end of trend line yield, than it is to fall short of it. And that is because I don't feel like the major jumps that we had been seeing in the late 2000s and the 2000 teens, basically from 2008 to 2016. I don't think we're seeing those same technical and farming practice advances that we had during that time frame. So in my mind, the yield curve's flattened out a little bit. So it's harder to beat it by 4%, for example, than it is to fall off of it by 4%. So I had a hard time really buying into some of those bigger numbers in the first place. But I think that's a very good point that you have, Michelle. I do think that there's a good chance, unless weather is absolutely perfect from here on out, that the higher end numbers might have already been digested by the market.
The other question is, how much higher can we take the corn market? Because we're now in December running up into some chart resistance again, aren't we?
Yeah, absolutely. Now we're running back into the upper end of this downward trend channel. I think it's going to take something more from that weather forecast to really break us out of it.
18-cent plus gains in the soybean market on Wednesday. Ted, do you think that market was also trading weather, or was this more about hopes about China?
The forecast for me isn't terribly threatening for soybeans. However, I think the threat or the concern comes in as well if these warm temperatures stick around and the precipitation starts falling out, or as we go further along and the forecast reaches further out in time, if that precip just isn't there and we have a repeat of the hot and dry finish that we had last year, that would be even more detrimental to soybeans. So there is a bit of nervousness of what those forecasts might do, because they had been trending a little bit drier over the last month or so. So yeah, I do think there's some weather premium in beans, but I'm also going to say that the flash sale that we had Wednesday morning of 120,000 to unknown for new crop soybeans. One, it's really good to see new crop soybean sales because we really need to catch up. We are well behind where we need to be to say that we're on pace to hit the USDA's target, even though they just lowered it by 70 million bushels on last week's WASDE report. But the unknown destinations, I think, is the bigger thing because a lot of people feel like that could very well be China, and China really is not on the books for any sales for new crop soybeans at this point. This still doesn't change that because it's technically unknown destinations, but we had been hearing some rumors the last couple of days that China is poking around for bids at both the Gulf and the Pacific Northwest, and you heard more of that, as the market went on today. So if China is coming back in to finally start filling some orders, or filling some of their needs for the new crop soybeans, that would be a welcome relief. But I'm not sure it's a good reason to see a sustained rally in soybeans. If anything, this might just have been a really nice bounce off of a very key technical support level or psychological support level in the form of the $10 mark in November beans, which were the low on Tuesday.
Technically, what do you think we need to see here for this rally to continue then?
Yeah. So beans need to close about 20 cents higher from here to say that, hey, this is a breakout on the chart to the upside out of the downward trending channel that we've really just kind of established over the last couple of weeks. So there is more work to be done there before we really say, from a technical standpoint, that hey, the lows are in for now, and that we have some higher trade. In order to get that technical result, by the way, I think you do have to have the weather forecasts be concerning enough, or some really big purchases coming out of China.
So wheat ended mixed today, but really kind of disappointing that it didn't follow corn and soybeans more. What's it going to take to finally bottom that wheat market?
Yeah, it's a tough time of year for wheats. With winter wheat harvest going on, we still have harvest pressure happening there, and we still have quite a bit of that winter wheat harvest yet to go. At least 30% or so. So we're not quite out of the woods yet on that harvest pressure, and I think that's what's kind of keeping wheat subdued compared to what corn and beans have been able to do the last few days. But as we start to move past that harvest pressure, if we are going to have a bit of a rally in the row crops based on weather or what have you, that would really help out wheat. The concern that I have for wheat is that right about the time that harvest pressure is subsiding, if the forecasts go back to looking more ideal for corn and beans, and this rally isn't following through to the upside, and corn and beans turn and start heading back towards those lows again, well, then wheat may have missed its opportunity. So, yeah, a bit of an extended rally, at least a couple of weeks of strength in corn and beans would really help out the wheat once it gets past the bulk of this harvest pressure that it's been in.
Well, and we talk about harvest pressure. It's not just in the US, it's the whole northern hemisphere, right?
Yeah, that's right. That's right. And we know that we are fairly competitively priced on our wheat right now, but it wouldn't take a whole lot of a rally on our end in our wheat prices to really price ourselves out. So I think the wheat market's being very careful about that. The one really good thing that we do have on a wheat balance sheet is exports have been fairly strong, right? And the USDA 2 times ago raised wheat exports. So we are optimistic about that. But again, we don't want to price ourselves out of that either.
Cattle market ended higher today. We negated Monday's pullback, and live cattle are back into record highs. Feeders did not go there, but do you think that the big discount that we're holding with the futures, will that keep the funds in here?
Yeah, I mean, there's really not been anything to scare them away. And I think the two things that could do that would be a technical breakdown, which, we saw the big heavy day on Monday, but very quickly we've taken all of those losses back, especially, when you look at the feeder cattle, that's very impressive. So that doesn't give them any reason to feel like they need to run for the doors from a technical standpoint. And then from a fundamental standpoint, I think their big concern is that if we were to see a big drop in the stock market, that consumer habits would change, and that the high price beef that we are currently absorbing at the butcher's counter or tolerating, or we talk about elasticity of demand, and beef demand has been very inelastic. um, the concern is that if we were to see a big break in the stock market, that people would start caring more and not wanting to spend as much money, and maybe tighten the belt a little bit. But that's not happened. I mean, the stock market just continues to be very resilient. We've thrown a lot of things, tariffs and things like that at it, and it keeps coming back. So I don't think the funds have a whole lot of concern here at this moment that this is a market that's going to turn around and go south. It will take something technical to do that. Now, this is a time of year where we get into what's called the summer doldrums, where everybody's out and celebrating the warmer weather in the first half of summer, up into that July 4th weekend, grilling and whatever. But then that kind of subsides. We kind of feel like we've had our fun. Now it's hot outside. Let's just stay inside. And so the grilling season kind of slows down a little bit between now and the Labor Day holiday. So seasonally, we could see that domestic demand maybe slump a little bit. So I am watching out for that. But at least for the moment, there's really nothing that's making the funds run for the doors on their long positions because the technicals look good, and the overall macroeconomic fundamentals still look pretty good.
Yeah, no doubt. All right, thanks so much. That's Ted Seifried with Zaner Ag Hedge and Markets Now.